Imagine waking up on a random Tuesday morning. You put on your uniform, you go to mop floors in a corporate cafeteria, you clock in, and, well, on your lunch break, you check your phone and realize you just became a multimillionaire overnight.
Which, I mean, that sounds totally made up, right? Like the premise for a movie.
Exactly. No winning lottery ticket.
Yep.
No inheritance from some long-lost rich uncle. You just showed up to your regular job, and the financial trajectory of your entire family line just, fundamentally changed.
Right, but it actually highlights a very real mechanic of modern wealth building, one that honestly usually happens exclusively behind closed doors for executives.
Yeah, and that is the exact reality we are exploring today. So welcome to today's deep dive. We know you, as a learner, really want to cut through the absolute noise of the modern news cycle.
There is a lot of noise out there.
So much noise. You want to get straight to those moments without drowning in information overload.
Yeah.
So the mission of this deep dive is to explore one very specific, honestly, very bold proposal to fix what has been a massive, decades-long problem in the United States.
That's right, the rapidly growing wealth gap.
Exactly. And we are going to be pulling from some really fascinating source material today. Specifically, we're looking at excerpts from an article that breaks down a recent appearance by billionaire Mark Cuban.
Yeah, this was on the What It Takes podcast, right?
Yeah, the one produced by Unmoderated News.
And, what stands out in this specific source material is that it totally bypasses the usual philosophical debates about inequality.
Yeah.
It actually presents a tangible structural solution, and it's proposed by someone who has, navigated the very heights of this economic system. He understands the actual plumbing of how money moves.
Right. But before we get to his actual solution, we have to establish the sheer scale of the problem.
Yeah.
Because, you can't fix a foundation if you don't realize how deep the crack actually goes.
Oh, absolutely.
When we think about the gap between the ultra-rich and everybody else, we usually picture it as like a ladder, right?
Yeah.
Where you imagine some people are just a few rungs higher up. Maybe they're taking slightly better vacations. But according to Federal Reserve data highlighted in our sources, it's not a ladder at all. It is the Grand Canyon.
Yeah, the data is wild.
The top 1% of people in the U.S. control much more of the country's money than the entire bottom 50% combined.
Just pause on that for a second. 1% controlling more than 50%? It's a staggering centralization of resources.
It's almost hard to visualize.
It is. And when a gap of that magnitude grows consistently over decades, it tells us that the disparity isn't an accident. It's not just some temporary market fluctuation.
Yeah.
It is a mathematical feature of the underlying mechanics of how wealth is generated and captured in a modern economy.
So, Mark Cuban looks at this canyon. And keep in mind, he's a Shark Tank investor, minority owner of the Dallas Mavericks. I think Forbes currently estimates his net worth at $6 billion.
Roughly, yeah.
He looks at this and says, the way to reduce income inequality for the working class is by making sure they get shares of stock in the companies they work for. Okay, let's unpack this.
Let's do it.
Because earning a standard static wage is basically like trying to fill a bucket that has a slow leak in the bottom. The water you're pouring in, that's your paycheck.
Right.
But that leak is inflation, daily expenses, rent, groceries. No matter how hard you work, no matter how many extra shifts you pick up, you're constantly losing water out the bottom.
That's a great way to put it. And what's fascinating here is the distinction between linear growth and compounding growth.
Okay, break that down for me.
So Mark Cuban's core philosophy is that true wealth is almost never generated by hourly wages. And that's because hourly wages are tied to your physical time.
Right, you have to physically be there.
Exactly. Your time is strictly finite. You only have 24 hours in a day, and your body needs to sleep for a portion of them. So if your income relies on your physical presence, there is a hard mathematical ceiling on what you can earn.
You literally can't work more than 24 hours.
You can't.
But owning an appreciable asset, which is what Cuban is advocating for here with company stock, that's fundamentally different.
Yeah.
That's not just a bucket. That is like owning a piece of the water company itself.
Yeah.
Your wealth grows automatically as the system grows, even when you are totally off the clock.
Right. An appreciable asset decouples your wealth from your physical labor. The value of that equity compounds based on the collective output of the entire company, the technology they own, and, the market's valuation of that output.
So you're earning while you're sleeping.
Precisely. Cuban is essentially pointing out that as long as the working class is restricted to trading time for money, they will never catch up to the class of people who are trading equity for exponential growth.
Okay, but hearing this theoretical idea of appreciable assets is one thing, but our sources actually highlight a massive real-world event where we saw this play out on just a wild scale.
The SpaceX IPO.
Yes, we are talking about SpaceX's record IPO.
And going through an initial public offering, or IPO, is a major liquidity event. To break that down briefly.
Yeah, please do.
When a company is private, employee stock options are essentially just numbers on a piece of paper. You can't easily sell them to buy a house or pay for college.
They're locked up.
Right. An IPO is the moment a company lists its shares on a public stock exchange, meaning anyone in the public can buy them. Suddenly, those paper shares that employees hold become highly liquid assets with an assigned cash value.
It is a lot of cash.
Mm-hmm.
A New York Times report noted that this specific SpaceX IPO could make around 4,400 employees actual millionaires.
4,400.
4,400 people. That is the population of an entire small town completely transformed overnight in terms of their economic mobility.
It literally alters the financial trajectory of thousands of families simultaneously. It's massive.
And naturally, the internet did what the internet does.
Oh, the memes.
The memes were everywhere. It sparked these viral memes all over social media, imagining the SpaceX cafeteria workers and the janitors suddenly becoming millionaires and billionaires.
Right.
You have this image of someone taking out the trash and suddenly realizing, oh, I can retire on a yacht.
And Cuban points to this as a massive success story.
He does.
He also mentions Tesla, arguing that when those companies' stocks go up, employee net worth goes up directly. And the source notes Cuban actually practices what he preaches here.
Yeah. He has offered equity to employees at every single company he has ever sold.
Which is important. His personal track record lends a lot of credibility to his argument. He isn't just theorizing from a distance, He has actually executed this model. However, we really have to look closely at the realities of the public markets here. Stock compensation is not a magic wand that only goes up. Our sources provide a very crucial reality check regarding that massive SpaceX IPO.
Ah, right. The fine print of becoming a stock market millionaire.
Exactly. The source explicitly notes that SpaceX's stock actually fell considerably below its IPO price at one point.
Like, wow.
Now, it was gaining ground on the day the article was written, and Wall Street analysts remain pretty optimistic about the potential upside. But that dip is a massive piece of this puzzle.
Yeah.
It highlights the inherent structural risk of the stock market. When your wealth is tied to an appreciable asset, it means it can appreciate, but it absolutely can depreciate just as fast.
And I really want to lean into that volatility for a second.
Yeah.
Because those memes of the millionaire cafeteria workers, they're hilarious,
Right.
but they set up a wildly unrealistic expectation of what this feels like on, say, a random Tuesday.
Oh, 100%.
Imagine you are that cafeteria worker.
Mhm.
You aren't a day trader used to watching millions vanish on a computer screen. You are serving lunch. And suddenly, your entire life savings, your ability to maybe send your kid to college or retire, is wildly fluctuating based on the daily optimism of Wall Street analysts.
Right. It introduces a level of profound psychological stress that wage earners typically just don't face in the same way.
Because wages are stable.
Right. A wage is a predictable contract. You know exactly what your paycheck will be next Friday. Equity is inherently unpredictable and subject to macroeconomic forces completely outside of your control.
It's like strapping your financial future to a roller coaster. You might end up way higher than you started, but your stomach is going to drop a few times along the way.
To say the least.
If the stock falls considerably below the IPO price, like the source mentioned happened with SpaceX, that worker isn't just losing theoretical monopoly money. They might be watching their retirement vanish in real time just because, I don't know, a rocket test on the other side of the country didn't go well.
And that is the double-edged sword of Cuban's proposal. By inviting the working class into the ownership class, you are also exposing them to the risks that the ownership class historically absorbs.
Right.
The wealth gap exists partly because the ownership class holds the assets that capture the massive upside of the economy, but those same assets are the very first things exposed to aggressive market corrections.
But okay, hearing all this success at SpaceX and Cuban's success with his own companies, it really makes me wonder if this is the ultimate wealth-building cheat code. Why isn't the bank down the street doing this? Why isn't every major corporation doing this?
Well, the data in our sources regarding current adoption rates is actually quite stark.
Yeah, the National Center for Employee Ownership looked at the numbers. As of 2023, which is the most recent data available, out of the thousands and thousands of publicly traded companies in the U.S.,
Yes, how many?
only 511 had employee stock ownership plans.
511. That is a remarkably low adoption rate for a strategy that Cuban is championing as a primary mechanism to solve income inequality.
It's tiny. So what's Cuban's plan to actually fix that? He believes these stock-based compensation programs should remain entirely voluntary. He's absolutely not advocating for a government mandate forcing companies to do this.
Right, no mandates.
Instead, the incentive he suggests is that the U.S. government could offer a lower tax rate to incentivize more companies to roll these programs out.
So he is proposing a fiscal lever, a carrot rather than a stick.
Okay, here's where it gets really interesting, and honestly, where I have to admit some confusion.
Okay.
I understand the idea of giving out shares to workers, but I always get lost on the mechanics of how this impacts the people already at the top.
Mm-hmm.
Are you saying that giving the cafeteria worker a slice of the pie actively shrinks the slice belonging to the CEO or the existing investors?
This raises an important question about the mechanics of corporate governance and something called fiduciary duty.
Okay, hit me with it.
To break this down simply, imagine a company's total value is a pizza cut into 8 slices.
Easy enough.
If you want to give a new employee a slice, you basically have 2 choices. You can either give them one of the existing 8 slices, which means an original owner literally loses their slice,
Like,
or you can cut the pizza into 16 smaller slices.
but wait, if I had one of the original big slices, and now you've cut it in half, my portion just got smaller, even though the pizza itself didn't get any bigger.
Exactly. That is exactly what equity dilution is. When a company issues new shares of stock to give to employees, it dilutes the value of the shares held by the current owners.
Oh, I see.
And here's the kicker. Corporate boards have a legal obligation, a fiduciary duty to maximize the financial value for their existing shareholders.
Right, they have to protect the investors.
Exactly. So giving away pieces of the company to the entire workforce is mathematically a cost to those existing owners.
Okay, so if only 511 companies are doing this voluntarily right now, is a simple tax break really enough of a nudge?
That's the big question.
Are corporate boards really going to voluntarily dilute their own ownership just to get a slightly better rate on their corporate taxes? That seems like a massive leap of faith to expect them to act against their own immediate financial interests.
Well, for a tax break to effectively incentivize this behavior, the financial benefit of the lower tax rate would have to mathematically outweigh the financial cost of diluting the equity.
Right.
The government would essentially have to make it more profitable for the company's bottom line to give away stock than to hoard it.
The math has to be undeniably good for the people at the top for them to agree to it voluntarily.
Absolutely. Cuban is relying on the premise that corporate behavior can be reliably steered by tax policy. And, we know historically that tax rates certainly influence how corporations report income or, where they build their headquarters.
Sure.
But changing the foundational structure of how an entire workforce is compensated, shifting from a wage model to an equity model, is a much heavier lift than just shifting money between accounting columns to optimize a tax return. Seriously, if you're listening to this on your commute right now, think about your own company. Would your board of directors ever agree to dilute their shares just for a tax break?
It's hard to imagine for a lot of places.
And that actually brings us to the most glaring loophole in this entire vision. What happens to all the people who don't work for massive publicly traded tech giants?
Ah, yes.
What if you work for like a local family-owned restaurant, a regional plumbing company, or a public school? They don't have an IPO. They don't have publicly traded stock to hand out.
This is a critical segmentation of the workforce. Any proposal aiming to bridge a national wealth gap has to account for the millions of private sector and public sector employees.
Yeah, because they're a huge part of the economy.
Exactly. Otherwise, you risk creating a secondary wealth gap, a society completely divided between corporate employees with compounding equity and everyone else who is just stuck with linear wages.
So the source actually provides Cuban's answer for this exact demographic. He leans on an economic concept called the wealth effect.
Right, the wealth effect. He argues that as more people, like those 4,400 SpaceX employees, see their net worth increase, they are going to spend more money. And that spending, according to Cuban, will impact and benefit other people around them.
The wealth effect is actually a very well-documented psychological and behavioral economics concept.
How does it work exactly?
Well, when people look at their brokerage account and feel richer on paper, they genuinely tend to have looser purse strings. They feel financially secure enough to buy the nicer car, renovate the kitchen, or just go out to dinner more often.
Which undeniably injects capital into the local economy.
It does.
So what does this all mean? Because to me, it sounds suspiciously familiar. I get the psychology. If I check my phone and my stock is up 20%, I'm probably upgrading to the fancy sushi for dinner tonight.
Naturally.
But I have to push back here. Is this wealth effect just a shiny new packaging for trickle-down economics?
That's a very fair critique.
Are we basically saying that the 50% at the bottom, the ones struggling with the leaky bucket, just have to sit around and wait for the newly minted SpaceX millionaires to buy more artisanal lattes and hire more dog walkers so that the local barista can finally benefit?
If we connect this to the bigger picture, it is vital to analyze the specific economic theory Cuban is relying on impartially here.
Okay.
We need to look at a concept called the velocity of money versus capital appreciation.
Okay. Velocity of money.
Right. The velocity of money refers to how fast a single dollar moves through an economy. So the SpaceX engineer buys a latte, the coffee shop owner uses that money to pay the barista uses it to buy groceries.
Right. The money is moving around.
Exactly. The money is moving, which is generally good for economic health.
But the barista is still getting a linear wage.
Yeah.
The barista isn't getting stock in the coffee shop just because the shop had a busy day.
And that is the crucial limitation. Secondhand spending absolutely increases the velocity of money at the local level, but it does not transfer appreciable assets.
Ah, I see.
Trickle-down theories historically rely on the premise that capital flowing downward efficiently lifts everyone's living standards. But critics of relying on the wealth effect to solve inequality argue that while it might raise the absolute floor slightly—
Like the local restaurant stays in business because engineers are eating there.
Exactly. It might do that, but it doesn't fundamentally change the power dynamic or the wealth structure for the non-equity worker.
Their bucket is still leaking. They are still trading time for wages, just maybe slightly more reliable wages, while the equity holders continue to compound their wealth exponentially while they sleep.
Right.
It's like, yes, the water company is expanding and they might buy more wrenches from the local hardware store, but the hardware store clerk still doesn't own a piece of the water company.
It highlights the exact friction point of Cuban's secondary solution. The mechanism that makes the equity holder rich, the compounding asset, is completely absent from the transaction when they buy a coffee from the wage earner.
It really makes you pause and think about the architecture of how we are all paid, and how those systems were designed long before we even entered the workforce.
It does. It forces you to look at the machinery itself.
We've covered some serious ground today in this deep dive. We started by looking into the absolute abyss of that wealth gap. Federal Reserve data showing the top 1% controlling vastly more than the bottom 50%.
Which is still hard to wrap your head around.
It really is. And then we explored Mark Cuban's vision to turn everyday workers into shareholders, effectively handing them a piece of the compounding machinery of capitalism rather than just a leaky bucket of wages.
And we broke down the immense potential upside of that, exemplified by the thousands of newly minted millionaires at SpaceX.
While also thoroughly acknowledging the harsh reality of market volatility, right? And the psychological stress when that same stock dips below its IPO price.
Yeah.
We looked at the surprisingly low number of companies currently offering employee stock ownership plans, just 511 in 2023. We unpacked the mechanics of equity dilution and fiduciary duty to understand why relying on government tax incentives might not be a strong enough lever to make corporate boards dilute their own slices of the pie voluntarily.
And finally, we analyzed the reliance on the wealth effect to support the millions of workers who fall outside the corporate equity bubble, questioning whether the velocity of secondhand spending is a mathematically robust enough mechanism to bridge a systemic wealth gap.
It is a massive amount of structural economics to process. So I want to turn this directly back to you, the listener. Think about your own industry right now. Think about your workplace and your daily routine.
Yeah, contextualize it for yourself.
How would your relationship to your tasks, to your boss, to your stress levels change if you were compensated in equity rather than just a paycheck? Would you work harder because you own a piece of the machine? Or would you be more anxious because your net worth is tied to quarterly earnings reports you can't control?
It's a huge shift.
It changes the whole psychological landscape of how you view a Tuesday morning.
It completely rewires the incentives of labor.
Hmm.
And to build on that reflection and on the harsh realities of the source material we discussed regarding stock volatility, I want to leave you with one final, perhaps unsettling question to mull over.
Uh-oh. Okay.
If we actually achieve Cuban's dream, and every single worker's wealth becomes directly tied to their employer's stock market performance, what happens when a company inevitably goes bankrupt?
Oh, wow.
Businesses fail every day. Blockbuster, Toys R Us, Lehman Brothers. It is a necessary feature of a healthy, competitive market that inefficient companies close down.
Yeah, that's true.
But if we rely on equity to fix the wealth gap, are we potentially replacing one form of inequality with a system where a working-class family could lose their job, their health insurance, and their entire life's retirement savings on the exact same afternoon?
That is a chilling thought.
Yeah.
You solve the wage gap, but you introduce a level of concentrated risk that could wipe out a family in a single Tuesday.
Well, that is exactly why we do these deep dives, to look past the shiny headlines and see how the gears actually turn. There is never just one simple answer. Thank you so much for joining us for this one. Keep looking at the data, keep challenging the structures around you, and we will catch you on the next deep dive.